as we prepare to welcome spring, we've got a very busy week ahead of us. Top down, the big feature is likely to be the latest set of data on American jobs and how many non-farm payrolls were created or cut during the past month. The figures for February are due for release on Friday the 5th of March. January's addition of 49,000 new jobs was widely seen as a bit disappointing, especially as the initial estimate for December was revised down to the loss of 227,000 posts. Now, this has all been very much in keeping with the trend shown by the weekly unemployment claims numbers, which have also begun to broadly flatline. Such modest rates of improvement seem to underpin the US Federal Reserve's ongoing quantitative easing or QE scheme, some $120 billion a month, and the Fed's determination to hold interest rates at a historic low of 0.25%. Moreover, officials at America's central bank seem set to run policy fast and loose until the US returns to full employment, even if that means risking a spike in inflation. There are two other numbers to watch here. The first is the headline unemployment rate, also known as the U3 figure. In January, this was 6.3%. Thankfully, a long way down from April's peak of 14.8%, but also a long way above last February's 51-year low of 3.5%. The second number is the U6 unemployment rate. That includes discouraged workers, those who cannot work full-time even if they want to, all underemployed people, as well as the unemployed. Now, this figure was still 11.1% in January, and Fed Chair Jerome Powell has begun to acknowledge this figure in recent speeches. Bottom up, we've got a deluge of company results coming, most of them final full-year figures. Around a sixth of the FTSE 100 is primed to report, and a good number of mid and small cap companies are due to do the same. Names which may be worthy of further research, either because of what they have to say about their own fortunes, their industry, or the economy more generally, may be as follows, although please do note that these dates can still be subject to change. Bunzl and bid target Agreco on Monday the 1st of March. Flutter Entertainment, Taylor Wimpey, Intertech, Robert Walters, Weir, Travis Perkins and Rotork on the 2nd. Persimmon, Polymetal, Page Group and DS Smith on the 3rd. Aviva, Melrose Industries, Entain, Meggitt and Chemring on the 4th, before London Stock Exchange Group closes out the week on Friday the 5th of March. But for all of those, the stock that could just cause the biggest fuss in the week ahead is Fresnillo, not least because silver miners and the silver price shot to prominence in the wake of the GameStop farrago, as the Wall Street Bets community on Reddit turned its attention to this precious metal and its producers. Now, as I record this, silver's trading near 8-year highs of $28 an ounce. Intriguingly, by contrast, Fresnillo trades near 8-month lows. Now, Fresnillo has 7 operating mines, 3 development projects and 4 advanced exploration sites, all in Mexico, a country that's currently particularly badly hit by the COVID-19 pandemic. Therefore, one reason for Fresnillo's underperformance relative to the silver price and that of gold, which it also produces, is a string of disappointments when it comes to meeting production and output targets. Commissioning of one of the development projects has been delayed by the pandemic, for example, although other mishaps have had an impact too, including a landslide at the Noche Buena gold mine. So, the first headline number to note will be production. January's trading update revealed output of 53.1 million ounces of silver in 2020, a 3% drop from 2019, and also a 12% slide in gold output to 767,000 ounces. Note that lead and zinc are other valuable byproducts of the silver mining, but attention will all really focus on the production update for 2021 and whether there's any change to guidance. Now, so far, Fresnillo has targeted silver output of between 53.5 and 59.5 million ounces of silver and 675,000 to 725,000 ounces of gold. Note also that Fresnillo ended calendar 2019 with reserves of 484 million ounces of silver and 9.2 million ounces of gold. Shareholders' attentions will then switch to earnings. Fresnillo's preferred metric here, as is the case at many miners, is earnings before interest, taxes, depreciation and amortization, or EBITDA. At the first half stage, EBITDA rose 53% year on year, thanks to higher silver prices, lower costs and the devaluation of the Mexican peso against the dollar, although that last item had a negative impact on financial items further down the profit and loss account that helped to drive net income 20% lower at the interim stage. For the full year, the analyst consensus estimate is for EBITDA of $1.2 billion, up 77% year on year, and earnings per share up 71% at 48 US cents a share. The final headline item will be the dividend. Fresnillo trimmed its interim payment very slightly, but is expected to pay a higher full-year distribution of 21 US cents a share, up from 14.5 a year ago, ahead of a further increase, according to analysts, to 38 cents a share in 2021. Much will, however, depend upon COVID-19, operational performance, and above all, the silver price. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.